Hello and welcome to the Trading Zone. I am Joe Teague with Brian Sutland. As usual, Brian, happy Monday. Have a good weekend.
Yeah, great weekend. Lots of fun-filled events with the family, and just ready to get back at it with the markets. Trading a little bit lower this morning. Watching some positions here, looking at maybe some re-entry points on any sort of pullback. Obviously, an excellent week last week, Joe, for the markets. Felt like we reached some technical breakouts, and we'll get into that in the show in a little bit as people sort of trickle in here. Joe, what did you think of the markets last week? What do you expect this week?
Yeah, it was a fantastic week. Most of it fueled by tech earnings. I think kind of started off with like the approach of, hey, the dollar sell-off has kind of been a little too much. Get a little bit of risk on going on, and that really dovetailed nicely into tech earnings. And just tech earnings were just so good. Number one, they beat. Obviously, it's good for the stock. Number two, just kind of a sign that these valuations are okay. Beating in the earnings is good, of course. The economy is doing well, but for the tech earnings, it was even broader than that because their CapEx. There was a couple things. Their CapEx remained really high, just kind of a sign that the AI trade can continue. Another vote of confidence for the economy, and then also, their buybacks remained intact. Just another really good vote of confidence for the economy. Really strong, really strong sign for the stock market and the economy. This week, Brian, we're going to have really big news, though. Can't wait to get into all that. We got the Fed. We got Palantir coming in with earnings after the close. I want to trade that. What's your thoughts on that?
Yeah, Palantir, what a run it's had, right? It looked like the end was near basically when all this sell-off started, January, February into March, especially April, when Palantir dropped below $100 a share. Lots of word on the street of people like this is overvalued. The top is here for it. And now we're looking at a stock trading back at a 120 level. It's been tremendous. The things they're doing is really just interesting and technology driven at the leaders of innovation in this. And you mentioned the tech sector really leading the charge this week. It did feel like a nice little turnaround here. And, we'll get some more news out of the Fed. I think that's going to be the big point here is will the Fed be willing to cut rates if the tariffs go on any stronger than where they're at right now? So
it's a double-edged sword, though, Brian,
yeah,
because we want the Fed to cut rates, but we also want inflation to come down, and we want people to have confidence in the dollar, feel like they can put their investments in dollars. But you know what? Let's get into it. Let's talk about all that as we go. Had a great weekend. Hope you did too. Actually, you know what we did the first time this weekend for Talia, my oldest, for 4th of May. May the 4th be with you. She saw for the first time at 7 years old Star Wars, and that was just fascinating to see somebody witness that for the first time.
right. What did she think of it? Was she into it or not
She
into it?
loved it.
Really?
Just really into it, and then she also got into the Mandalorian. So that's kind of even more her speed with like Baby Yoda. She's like,
Yeah.
it's like that guy's so cute. I just want to. That's all she wants to do is watch Baby Yoda now. But.
Well, I think when it comes to Star Wars, it's kind of interesting with the kids. I feel like it's like an option trade that's binary. It's a $1 call spread, and they either love it or they kind of just are like, this is boring, and they're done with it right away. So it's good to have her in the Star Wars neighborhood of crew.
Yes, and I love it. So it's fun. It's a new thing to do it, but also over the weekend at the big Berkshire Hathaway conference, the Oracle of Omaha, just kind of the legend. My whole career just kind of looking up to this absolute monster, just saying this guy just consistently is right time and time again, and he doesn't really care about like the day-to-day swings. He just knows kind of big picture things. And just has a method, sticks to the method. He believes and achieves to the fullest, Brian. And he, after this legendary career, is stepping down.
It will be a question of whether this stock can continue. I mean, I've loved this stock for years. The stock trading down about 6% this morning on the news of this, and obviously their earnings. But obviously he's been so smart with the market. He was pulling back and adding cash at the end of last year. He got that right with fears of tariffs. That's just one of many things that he's called correctly. So it will be sad to see him leave that company as CEO. Hopefully, he's had everything in place. And I mean, look, the success of the company doesn't, big corporations running huge positions, huge investment strategies is not all dependent on one person uh, pulling all the strings. So I think they've had
I think
everything
more
in place.
importantly, Brian, it's not dependent on market timing too. I think this
Yeah,
is a very simple formula, like the Buffett equations of, when the price to earnings gets really high, you don't need to own as much stocks as you used to. Just makes a lot of sense. Over time, historically, he's been proven right time and time again there. And sometimes he's too early, like he got out in 2005 and the market continued higher for a year and a half more, right? So, he wasn't necessarily wrong in 2005. He was just early, and ultimately he was able to buy the stocks back cheaper. And it looks like he's done so again.
yeah. Well, we'll see how that materializes. Maybe we'll actually even have a trade next week on that to see how we play it. Or if you subscribe to our newsletter subscription service, we may even come up with a trade midweek on a stock like that. See how we can play it. Obviously, pulling back might be some opportunity with the fear of him getting out to sort of come in and scoop in a great, excellent stock that's just achieved for investors over the years.
Yeah, because he's not about market timing. I think he can teach his wisdom on to the next generation. I think it's kind of set up there, plug and play for them to
Yeah.
continue their dominance. Well, kind of a throwaway Buffett had in that meeting line was he was talking about maybe diversification out of the dollar, talking about how the dollar's weakness. This is really I don't know if the market's just looking at Buffett for cues here, but it's kind of like a continuation of what we were seeing earlier last month. I thought it was great last week. The dollar stopped falling. There was some confidence in the U.S. dollar, there was some confidence in some risk assets in the U.S. And that's kind of unwound today. We're seeing.
Yeah, it's interesting. You look at gold is up almost 3% today after having like a few bad trading days, looking like it's okay. Maybe it's topped out. Very strong today. I don't know if it's strong because of Buffett's comments. If people are looking at the Fed this week that we're going to lower interest rates and that's going to weaken the dollar as well, or what. But gold back on track after having a couple bad days. Seems like the non-dollar trade is still on.
Yeah, non-dollar trade is on, and it's actually really causing some trouble in some places like Taiwan. They do a lot of trade with the U.S., are really dependent on the U.S. A lot of people held U.S. treasuries, quote unquote risk-free, but when the dollar is tumbling so much, there's some big pain there. So there's some trades that are very dangerous when you're looking at that versus other currency. People use a little leverage. So there is potential for volatility to really slip into asset prices, equity prices from treasuries just because of the currency fluctuations.
Yeah, and speaking of volatility, I can't wait to talk about the VIX and volatility because the volatility, I think, in the currency markets is bleeding over into stocks. Obviously, the uncertainty in the stock market. So when we get into that, that should be one to really discuss as we've seen the VIX now come well off its highs, but still elevated relative to things. But yeah, I mean,
we'll get into that shortly. Yeah, that volatility was exactly what we saw last August. We saw the yen Mageddon, I think it was the currency crisis. Just wrapping up some of the news. Still some potential for some bright spots this week. Of course, the Fed could surprise us with some good news for the market. There could be some trade deals this week. I'm hopeful there are at least some concrete signs of progress. I don't like this hinting of things that are going to happen then don't happen. The market ultimately is going to be hurt if that's the case. But I'd love to see some trade deals coming along, and I'd love to see a budget, just more concrete actions on what's going to be in this budget. What are the tax cuts? What's a deregulation? What do we have to bite our teeth into here, Brian?
Yeah, and then you also have, just to throw a little wrench in it, a little petition going on in Alberta, Canada, that province looking to potentially petition to secede from Canada and join the U.S. as the 51st state. So that buzz is kind of swirling a little bit in the rumor mill. So there's lots of just,
Alberta now.
what's that?
Alberta wants to get out now.
Yeah, Alberta wants out.
Man,
That is the rumor on the street. So
Are
they're
the
just,
Quebecois, like are the Quebecans saying, "Hey, don't copy me. You can't secede. That's my deal."
yeah, probably. I guess so. I don't know. Maybe the answer is just break Canada up into a couple different pieces. But yeah, you have here on the week FOMC meeting. That's going to be really the big one. I'm looking for them to sort of change their tune on saying, yeah, we will cut rates if the economy starts to slow, which we already saw, right? The last quarter GDP, Joe, negative, right? So another negative print that would start to lean towards recessionary fears, and obviously not good for the market as you
So
get
there's
negative
some
GDP.
wacky stuff going on in that GDP with the imports, exports all over the place, like getting it ahead of the tariffs, etc. But yeah, that was negative. That wasn't good.
Yeah, and you're right. I mean, I think the market kind of shook that off as like maybe that print number wasn't as bad as it really seemed, because we
Yeah.
obviously saw a huge reversal. It was almost like a carpet shakeout in stock market.
Mhm.
On that print, the market was down hard and then just rallied and actually broke through some upside technical levels, which I think was very bullish. But yeah, we'll be watching the Fed. We'll be watching Palantir this week, and we got to trade at the end of the show to trade Palantir. As we've already sent that out to our subscribers, but we'll kind of recap it and review it and give you our breakdown of why we like that trade.
Yeah, finally, I mean, not to be totally discounted, just one of the other balls in the air, of course, is peace deals. We focused on Ukraine very much so, but there's going to be a ramp up in Gaza, very likely coming
Yeah.
very soon. That spills over into the Iranian potential nuclear deal. So there's a lot of potential risk geopolitically out there. Certainly should be watching oil for the Middle East stuff, even some of the Ukraine stuff. But on the flip side, I think this would be really good news to see some of these peace deals finally come through. But anyways, it's just another thing to consider, kind of on the back burner, because there's so many other domestic things that are just right in front of us too, while we're watching this all play out. Here is the SKU index. If you're new to watching us, this is something we look at every week. It's the 25 delta call in the S&P 500 30 days out versus the 25 delta put. This is something we like to use as part of our VIX trading model. It's kind of watching this where it's going, giving us clues, and it's kind of saying, hey, we kind of bottomed out last week, looking to head higher. How much higher? Anybody's guess, but certainly a sign that volatility is looking up this week.
Yeah, when we saw put sellers come back into the market and call buyers, the SKU dropped tremendously, because obviously the SKU index is based off of the put minus the call. So seeing that fall obviously was very bullish activity, getting ahead of this recent rally here, and now ticking up a little bit today is sort of interesting, Joe, because we're starting to continue to make higher lows. So that still has me worried that we haven't really broken this trend of people wanting insurance on the downside, right?
Yeah, well, last year, 2024, we were kind of in this box. It doesn't surprise me too much to see this kind of like a floor down here. Maybe it would be normal to see like a new range in here. We can kind of see
Yeah.
like this is the low end of the range, this is the high end of the range. And we just be expecting heightened volatility. Best case scenario, the market continue to just climb this wall of worry. We can continue to have these volatile events. The market will have swings, but at the end of the day, be higher. That's what we're hopeful for. But I think we should just expect these moves for the rest of the year.
Yeah, maybe that gets in a little bit if we talk about the VIX and the levels of that, right? If it's going to sort of be in this box formation on the SKU, and puts are going to be relatively elevated versus where they were, let's call it 6 months ago. You look at the term structure here on the VIX and what the VIX is doing. Obviously, it's come off tremendously, dropping very hard despite realized volatility in the S&P over the last 30 days remaining pretty high. But obviously, traders, this is forward looking, right? The VIX is looking at what volatility going to be over the next 30 days, not looking back of what it was. And VIX futures further trying to predict where the VIX is going to go 30 days or 60 days or 90 days from there. So you look at the term structure there. I like to look at this 2 month level, I think, Joe. I think this is kind of interesting to look at, and the 1 month, and somewhere in between is probably the right level. So we've kind of, I think, settled in almost at fair value. But I would be looking at these back months, right? Because that 90-day window on the tariffs comes into effect for July and August and then September. So I'd start looking at some of those months here, maybe to look to own if this curve drops a little bit further from here.
Yeah, that makes a lot of sense to me. What do you make of? So certainly, a month ago we were much higher in the VIX, but a week ago we had a big rally in the market. But I think the curve is only very slightly lower from where we were a week ago. What do you make of that? Like the market's higher, but and VIX is lower, but just very slightly lower.
Yeah, right. Yeah, well, I mean, I think when you look at the realized volatility of the last 30 days, like I said, now the next 30 days doesn't mean the last 30 days are going to replicate, but there is still, I think, this indication. The reason the VIX and these futures are still remaining elevated is, 20 VIX might be the new 15, right? Where before VIX gets down to 15, it gets below its historical mean. It was probably a buy. If I was looking to insure a portfolio, I'd be a buyer of options at that level. That might be around the 20 level now, given the amount of uncertainty in the policy of this regime, and the uncertainty of what the Fed is going to do. It seems like they're not synced up, like what Powell wants to do, what the administration wants to accomplish. They're not synced up. So a lot of uncertainty, volatility. And then, you mentioned earlier in the show, the currency markets having some volatility, that's going to bleed into our markets. And so I do believe this VIX is going to probably stay elevated above this 20 level for a little while.
Yeah, well, let's take a look at how we are looking in the indexes, and maybe that can kind of give us a clue as why the volatility is remaining stubborn here. So yeah, here's the S&P 500. This is a 3-year chart, of course, breaking through very nicely this declining 50-day moving average, Brian. But we're coming up against here. Resistance would be this 200-day moving average, and yeah, this is kind of a spot where you would expect a little bit of a stall. Going to be hard to crack above that. So that kind of makes sense to me. And it just kind of makes sense for me for people who had been buying this dip, just looking for an exit point. This kind of naturally comes to this spot. So it just seems for like gamma traders, people just kind of playing for more movement. It seems natural to just say looking for a little pullback, and then maybe you can get a bounce, another test of this 200-day moving average next week.
Yeah, I was looking to maybe hedge my gamma too. If I saw the S&P get above 5,800 here, I think that would probably be a good spot to maybe hedge some of that gamma movement of deltas you've probably accumulated as the market's risen significantly off those lows. I kind of like somewhere between 5,800 5,850. I think it's right that we find sort of a pause here. Joe, do you think this pause lasts all the way through the 90-day window that Trump is waiting to decide on what to further do with tariffs? Or is this a 1 to 2 week pause that we take before sort of sorting itself out?
It's a daily pause because there's news every day, and it seems like the market's going to respond every day. The market's going to move in a big fashion off of the Fed. And there's potential trade deals coming with Iran, Japan, or India, excuse me, not Iran, soon. I think the market will have a nice reaction off of that. And then there might be a different headline about China saying, we're not decreasing tariffs, or we are increasing tariffs, or what we previously thought is come undone. So I think there is potential for the moves every single day, Brian. So I think we just have to be on our toes. And it almost seems like an ebb and flow back and forth, just environment, just a very good trading environment.
Sure. Yeah, really. Yeah, it's definitely a good trading environment. I mean, I think if you get a pretty sizable move, there's maybe some opportunity to get out and then rebound.
NASDAQ chart looks a little more concrete. You got this declining 50-day very close to 200-day moving average. That seems like a kind of a natural turnaround spot, just a little bit of hedging. Not saying that we're going to necessarily go test the lows, but just seems like a natural hedging spot to turn around. And it really would be nice to see this turn into, a head and shoulders bottom here, where you can go back higher above the 200-day moving average after we, maybe get a neutral to positive Fed meeting and a trade deal comes through it. More good tech earnings. I think that's very feasible to see later in the week. Or
what do you think is a good entry point here on the Nasdaq? I'm thinking like 19,500, pull back there close to the 50-day moving average. I think we'd probably get a pullback to there. I think so, but yeah, this chart looks really strong. If it were to pull back to there and hold and then move forward.
Yeah. So obviously, let's take a look here. This level right here, this shoulder right there looks really strong. I think it might coincide with this declining 50-day moving average if we came down there. I mean, this would be very, very attractive for me. Something like that around 19,500. It looks like, but maybe I think you might see might see buyers be a little more aggressive too. It might not even get back there, which
Right.
would be even more bullish.
Yeah, for certain. So maybe buy below, look to entry below 20,000 and maybe take some profits for right now above 20,000 and see if it can sort of crack through this 200-day moving average. If wanted, I guess you could be a little bit more conservative and just wait for that head and shoulders bottom to complete itself, right?
Yeah, well, there's seemingly more potential here in the semiconductors. Wider gap here between this 50 and 200-day moving average. This just seems to be like the trade that we used to love, like in 08, Brian, when we had this 50, 200-day, like breakthrough. It just seemed like once it got through this 50-day moving average was declining, it was gonna kiss this 200-day. So this seems like there's a little bit wider gap here in the semiconductors, some room to run. Names like NVIDIA, obviously come to mind. AMD has earnings this week. That's going to be crucial to this trade. Yeah,
it does look like that kind of like little double top kind of movement, right? We tried to totally break down, and it looks like a complete failed attempt to do that, right? Which could be very, very bullish. I mean,
it could be.
This thing could easily go to the 200-day moving average.
I would not. I mean, the 200-day moving average, unfortunately, is declining kind of sharply. I would not feel fully confident until we were like decisively above the 200-day moving average, and there was trades above that. Maybe that turned into support, and then really you want it. I mean, the horrible thing is these averages are moving lower. You want them to flatten out here and ultimately turn higher. I think that's when you really feel like you're in a bull market.
Right.
If we race through here, great earnings, great, whatever. I mean, that'll happen in a hurry. That's one option. Or if we can just trade sideways here, good earnings, more wall of worry climbing, it'll happen sideways too. So couple options. I think it's just good news. Number one, that the fall has been like stabilized. The free fall has stopped. It doesn't mean we're out of the worry completely yet.
Yeah.
I think one of the best ones though looks like the financials, and it's just like I mean, it seems like all of these fears, like the tariff fears, and the flight of capital, and everyone's hoarding money. You think this would be hurting financials the most? Like people aren't investing in their business because they're uncertain about tariffs, but the banks just can continue to rack up profits and continue to lead the way. This just does not look recessionary to me, Brian. It's just kind of a head scratcher.
Yeah, it really is. That chart looks great. Talk about a failed headed topping pattern and rip back to the upside. It really looks good.
100%. Textbook head and shoulders. You saw this. Everybody saw this, and that's why you saw this massive plunge. And it just really quickly got back to this level, consolidated, and now we're ripping through it. I mean, this is just exactly the failed move, which you wanted to see. And then is this going to turn into like a fast move, racing us to all-time highs? I mean, we're getting there quickly.
Yeah, I'd probably be looking to add some sort of bank financial into the portfolio. I really like one thing we've held off on is we have bought for clients. We bought JP Morgan, we bought HSBC. I might look to add maybe Wells Fargo. I think with the steepening yield curve, if we get the Fed to say they're going to cut and the 10-year and 30-year still kind of stays a little bit elevated and that yield curve starts to steepen, that's one stock I'd maybe look to add and buy. I don't know, maybe wait for the Fed decision. Let's see what happens and see what they say. But that's one stock I'm really looking at.
I keep on coming back though, Brian, to the deregulation people are talking about. People are thinking about deregulation in industries. People are thinking about deregulation for certain, corporate taxes or something. But I think some of the Dodd-Frank regulations which went on could be unwound, and it could be like a double win for the market. A lot of the risks that we saw with the hedge funds and the reverse repo were related to the Dodd-Frank rules. JP Morgan was talking, or Jamie Dimon, excuse me, was talking about it. Just saying, hey, we can't get into this market. We could totally clear this up in the snap of our fingers. If they could just get into that reverse repo market, there wouldn't be this liquidity risk. It would be kind of a huge, liquidity boon to the market. I think banks would do great, obviously, if they could go back into that market and be good for liquidity. I think that's one area of deregulation maybe we aren't thinking about where banks could be a big winner there. So just keeping that in mind as we just are waiting for this budget to finally materialize.
Yeah, the deregulation is definitely an issue and a benefit boom for the financials. So another reason to buy XLF for individual names, so to speak, and play to the upside.
All right, well, let's head into the earnings of the week, Brian. Palantir has earnings. Let's take a look at. You know what? We started talking about it. Off this chart, I think it was about $14.
Yeah.
Back then, if you've been watching our show for that long, that's awesome. Thanks for doing so. But yeah, it's been a tremendous run, a tremendous ride. When people think of AI, everyone's thinking about the large language models and maybe a scheduler that does things for you. But that's not really and those AI things have been interesting, cool, but not really a profit generator. Palantir does is real actualized AI decision makers, and it's kind of like a large language model for like spreadsheets and like massive data. And it's very amazing to see what they've done. I think they're just implementing the AI in for large companies, for governments, in a very usable way, which is just making them more efficient, making them money, and just really been an exciting thing to do. And their growth has just been amazing on top of all that. So, but their growth is also coming with an extremely high multiple. Their growth is brought people to expect more growth. So it's not a free ride here on Palantir, as we saw. It went from 125 already all the way back down to the mid 70s here, just in a very quick order.
Yeah, well, I mean, look, we've loved this stock, Joe. We talked about it. We added it to portfolios for clients. I invest alongside our clients at Equity Armor. So I've been happy with that investment. It's done great. I look at this chart, though, and I say to myself, can it go higher or does it need to pull back? And so, Joe, do you have an options trade that sort of takes a look at this chart, considering where it's come from in just basically the last 2 weeks even? And can it go higher? Is there a safer way to sort of play this?
Yeah, well, I think just kind of a protection trade into earnings. Let me get into some of the numbers real quick, and let me just kind of point out one potential. We got some. I don't know. Is this diamond hands? What is this? Holder. Anyways, we got this massive chart here. Ideally, as a holder of Palantir, you want to see this just racing higher. That doesn't always happen. I think a really good formation to be hopeful for, Brian, here would be a cup and handle. Turn this into big cup, handle, and then higher. So that's where I'm looking at into this earnings, kind of looking at, this 50-day moving average right here around 90. Hopeful that turns into support on the downside, because this is this one this right here is what I'm worried about. This number right here.
Oh man,
that is. It's hard to justify. I mean, it's hard to say. I mean, I know it's growing at a fantastic rate.
I mean, I think the trailing PE number, though, you can't look at that on a company that's growing as fast as a company as this. You can look at the forward PE, because that is what people are thinking the stock is worth based on their forward-looking guidance, right? So
that's a lot more palatable. it's 200% better there.
Yeah, right. But yeah, I mean that is elevated. It is interesting that when you look at the analysts, look at the analyst coverage, 5 sells on the stock, which for a stock that's done as well as it is, man, who are those analysts that have gotten run over?
Yeah.
And look, if they come out with good guidance, I think actually the one thing to look at with that is if those analysts change their tune and upgrade, that could be a little boost for the stock as well.
And you know what? They always beat. They always beat their earnings. They have amazing, they have the most amazing workforce in the world. Now they're well compensated. They make a lot of money. They're getting a lot of stock options, but they are stealing the best talent from all of Silicon Valley.
So you look at that column, percent surprised. They haven't missed earnings going back all the way to November of 2022. That's unbelievable.
But that's not to say the stock always goes higher.
Correct. All right. So what's the trade? Give me the trade on this here. Stock doesn't always go higher. You're worried about the 50-day moving average all the way back at $90. The stock's above 120. What do we do here?
Yeah, very, very, very quickly. We are just in May, just buying the 110.90 put spread. This is with owning this name, owning the stock. It's a protective put spread. It's going to cost $356 to do so. Going to give me coverage down to 90. I think if it decides to shoot higher, I'm going to be happy to eat this 356. And if it does go lower, it's going to be something I will be thrilled to have on. I'm going to take this off if it does go lower, because I expect buyers to come in on the dip because people are waiting for this name to fall. That's why it rose so quickly when it did come down. I just think it really needs to just grow into this valuation, and it's just going to need time to do so. For me, I think there's so many great things going for the stock. Everyone knows how much I love it. They have so much cash on hand. When they think the time is right, they can deploy that cash and grow their customer base, which is almost, I wouldn't say exponentially, but it's going to vastly increase their customer base. And when they get a customer, it is for life, and they don't go away, and they are big paying customers, which are just really valuable to them.
Yeah, I do think this is a trade we're going to have to update for people, because when you look at it, this is obviously third week of May, right, Joe? So earnings are going to come out this week. Let's say the stock drops and moves down only to 110. The value of that 110 put is going to still have some value. So if it doesn't crash through this strike and the $90 put looks like that's going to zero, we may want to just take the protection off, be happy with, okay, slight little decline off the highs here. But what this put spread is sort of protecting against disaster drop scenario, where expectations of future earnings are not going to catch up and allow that forward PE to come significantly lower. So if there is some signs and cracks in their earnings report that shows that the valuation is just astronomical, you could see a significant drop. So this is a decent sized premium to put on for just a short amount of time, but I think maybe it's just valid just maybe to do this one time, given how much the stock has run up, and so you got to just manage this trade though, so that you don't collapse and lose 3% premium.
Well, just so you know, if for us who are Palantir holders, the 125 call in May is 8.5. So putting that on with the call, be collecting some premium, kind of stopping yourself out if we rip higher. I like that trade a lot too, as one option. Maybe an entry point to buy Palantir would be selling a downside put into this event too. So another option for me, just thinking outside the box. But volatility is elevated here into earnings, and we're at a very high spot. Just kind of going back to this sell-off here, which is really what I'm worried about. You had Palantir running up to this high level, and you had the market coming off, and Palantir is just a very high beta name. If the market does have a negative week, Palantir, like regardless what their earnings do, they're going to be negative, unfortunately. So it's just kind of another layer of protection. We got the Fed and all the other risks going on with the dollar with it too.
Yeah, I would say also, if I didn't have any position in Palantir, right, and I was just like, okay, where can I get in? How can I own the stock? I might not even buy the 110 put. I might just sell the 90 put. I know it's like really cheap, but I think the technicals make sense.
You could go out a couple more months and sell that.
Yeah.
Probably get a really premium.
That might be a nice little premium add, and then decide what to do. Maybe buy like a little touch of stock right here, and then now I can kind of like average in as the stock moves down. And if I don't, okay, well, I bought a little bit at least right now and caught the upside from here. And if the stock goes lower, I can average in, somewhere in between this 90 and 120 level. I almost like that for somebody that's brand new to the stock, has some cash to deploy, looking to add to a high flyer. It's maybe a good way to get an entry point. But obviously this trade that we outlined is for somebody that protects a long position that they have on it currently.
Yeah, and just kind of also protection against long a lot of other assets too. Just if the market has a similar week as we saw 2 months ago. This
Palantir, the leader, could be the leader to the downside.
And I would almost expect that, just because when people need to raise capital, they're going to raise it on the recent gains, the most risky, the highest leverage names. So it's going to be names like this. It's going to be tech names that had a big week last week too.
Sure. All right, Joe. I think that just about wraps it up, right? It's been a good show.
That wraps it up. Thanks everybody for tuning in. I had a really good show. I think we nailed it, Brandon. We crushed it.
Yeah, really. Every week. Well, what I like is, people that subscribe to our trade strategy, like this Palantir trade, you can kind of use this show to help break it down, get a better understanding of the trade we put out. But obviously, we put out others. A lot of insight here. Tune in every week so you can hear our story on volatility. Us being experts and traders in the pit, in the VIX pit, we obviously offer that out every week, along with the macro topics that we talk about. So make sure you join us every Monday, right around 10 Eastern, maybe a few minutes after we go live. Make sure you tune into our YouTube channel at Equity Armor, or follow myself at Brian Stutland, or follow Joe on x.com. Tune in, watch our show again, replay it, love it, like it, subscribe, all that good stuff. We'll see you next week. See you next Monday, 10 a.m. Eastern.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.